Most people think wealth is built by earning more money. Very few realize that wealth is just as often destroyed quietly and legally through misunderstanding taxes. Taxes are rarely dramatic. They do not announce themselves as enemies. They show up as deductions on a paycheck, as confusing forms filed once a year, as rules people promise themselves they will learn later. And yet, over a lifetime, taxes often take more money from an individual than bad investments, poor spending habits, or even major financial mistakes. This is why understanding taxes is not an advanced topic reserved for accountants or the ultra-wealthy. It is a foundational layer of financial intelligence, and the books that address it properly tend to change how readers see money forever. One of the most influential thinkers to connect taxes directly to wealth building is Robert Kiyosaki. While Rich Dad, Poor Dad is often remembered for its simple lessons about assets and liabilities, its deeper contribution lies in how it exposes the tax code as a map of incentives. Kiyosaki argues that the wealthy do not win by cheating the system, but by understanding it. Governments use tax laws to encourage certain behaviors: investing, creating jobs, owning businesses, providing housing, and discourage others. The poor and middle class lacking education in this area often end up paying the highest effective taxes because they earn primarily through wages, which are taxed first and most aggressively. Whether one agrees with Kiyosaki's tone or not, the idea that taxes shape outcomes more than effort alone is a mental shift few readers ever forget. But awareness without structure quickly turns into confusion, which is why Tax-Free Wealth by Tom Wheelwright becomes such a critical next step. Wheelwright, a CPA who works closely with entrepreneurs and investors, reframes the tax code not as a punishment, but as a series of clues. His central argument is simple, but powerful. Tax laws are written by governments to achieve economic goals, and if you align your financial activities with those goals, you are rewarded through deductions, credits, and deferrals. This book demystifies depreciation, business expenses, and investment incentives in a way that makes the reader realize taxes are not about clever tricks, but about positioning. Wealth grows faster when fewer dollars leak out unnecessarily, and tax efficiency is often the difference between two people with identical incomes ending up in radically different financial positions. Another essential perspective comes from The Millionaire Next Door by Thomas Stanley and William Danko. This book is not about tax strategy in the technical sense, but about behavior under the tax surface. Stanley's research revealed that many high-income individuals appear wealthy but remain financially fragile, while many true millionaires live modestly and obsess over taxes, costs, and long-term efficiency. They understand that wealth is what you keep, not what you earn. Taxes in this framework are not an annual inconvenience, but a lifelong variable to be managed deliberately. The lesson is subtle, but profound. People who respect the compounding effect of after-tax dollars tend to accumulate wealth quietly, while those who ignore taxes often spend decades running uphill without realizing why progress feels so slow. As readers move deeper into the subject, books like I Will Teach You to Be Rich by Ramit Sethi offer a modern, pragmatic bridge between theory and daily life. Sethi does not encourage tax obsession, but he emphasizes automation optimization and understanding marginal decisions. His approach acknowledges a truth many tax books ignore: perfection is not required. What matters is setting up systems, retirement accounts, tax-advantaged investments, and automated savings that quietly improve outcomes without constant effort. For younger readers especially, this book introduces taxes not as something to fear, but as something to integrate seamlessly into a larger financial strategy. What ties all these works together is a reframing of responsibility. The tax system is complex by design, but complexity does not absolve individuals of the consequences of ignorance. Wealthy families pass down, not just money, but understanding when to defer income, how to structure ownership, why timing matters. Those without this education often assume taxes are fixed, unavoidable, and beyond influence. The books that matter most challenge that assumption, showing that while taxes cannot be eliminated, they can often be reduced, delayed, or redirected in ways that dramatically alter long-term outcomes. At a deeper level, understanding taxes forces an uncomfortable confrontation with how society actually functions. Idealism gives way to realism. You begin to see that fairness is not administered equally through effort, but through rules, and those who study the rules gain leverage. This realization can feel unsettling at first, but it is also empowering. Once you understand that taxes are not merely a bill, but a signal, you start asking better questions about how you earn, how you invest, and how you structure your financial life, rather than accepting default paths that quietly extract value year after year, until one day you look back and realize that the difference between financial stress and financial stability was never income alone, but the accumulation of small, invisible decisions made without understanding their long-term tax consequences. And that is exactly where the conversation must pause for a moment, because the next step is not just knowing which books explain taxes well, but understanding how this knowledge changes behavior over time, and why those who truly build wealth treat tax awareness not as a one-time lesson, but as a lifelong practice that shapes every major financial decision they make. And that continuation begins with the realization that taxes do not merely affect wealth, they actively sculpt it by rewarding certain paths and punishing others. And once you see that pattern clearly, you can no longer return to financial innocence, and must decide consciously whether you will remain reactive or begin designing your financial life with intention, which is where the story continues with that realization. Because once you truly understand that taxes are not passive deductions, but active forces shaping every financial outcome, your behavior begins to change in ways that feel subtle at first, and then irreversible. You stop asking only how much something earns, and start asking how much of it you actually keep. You begin to notice how two people with the same income can live entirely different financial lives, simply because one understands timing structure and incentives, while the other accepts default treatment without question. This is the quiet edge that tax literacy provides, and it compounds just as powerfully as investment returns. Over time, those who internalize this knowledge develop a different rhythm to their financial decisions. They do not rush income into the present without reason. They value tax-deferred and tax-advantaged accounts, not because they are fashionable, but because they understand the power of letting money grow without friction. They think carefully about business ownership investment vehicles and expense classification, not to evade responsibility, but to align their efforts with the way the system is designed to function. This is not about loopholes, it is about literacy. Just as someone who understands interest avoids predatory debt, someone who understands taxes avoids structural disadvantages that quietly erode wealth year after year. Perhaps the most important shift is psychological. When taxes are misunderstood, they create resentment and helplessness. When they are understood, they create strategy. People stop feeling punished for success and start recognizing that the tax code is a language one that can be learned, interpreted, and used responsibly. This is why the most financially stable individuals do not outsource all thinking to professionals, even when they hire them. They educate themselves enough to ask intelligent questions, to recognize trade-offs, and to make decisions with clarity rather than blind trust. The books discussed earlier are not meant to turn readers into accountants. They are meant to turn them into informed participants in their own financial lives. Another pattern emerges among those who build lasting wealth. They think generationally. Taxes are not viewed as an annual event, but as a multi-decade consideration that affects estate planning, gifting, business succession, and family education. Wealth that survives across generations almost always rests on shared understanding, not secrecy. Children who grow up learning why certain financial choices are made inherit not just assets, but frameworks for thinking. This is why tax education, though rarely discussed openly, often marks the invisible line between families that preserve wealth and those that lose it within 1 or 2 generations. At this stage, the role of essential reading becomes clear. Books about taxes and wealth are not consumed for motivation. They are studied for orientation. They help readers see where they are standing within a system that already exists and what levers are realistically available to them. They replace vague hope with informed agency. Over time, this agency reduces anxiety because financial outcomes feel less random and more responsive to thoughtful planning. The final lesson these books collectively deliver is both humbling and empowering. Taxes will always exist, rules will change, complexity will remain, but ignorance is optional. Those who choose to understand how money flows after taxes gain something more valuable than higher returns. They gain predictability. They can plan with confidence, adjust with intention, and respond to change without panic. In a world where uncertainty dominates markets and careers alike, that predictability becomes a form of quiet wealth in itself. If there is a reason to read these books now rather than later, it is that tax decisions made early echo for decades. Missed opportunities for deferral, inefficient structures, and uninformed choices rarely announce their cost immediately. They reveal themselves slowly in the form of constrained options and unnecessary stress. By contrast, informed decisions made early often feel boring in the moment, but they create future flexibility that feels almost miraculous in hindsight. If this perspective shifted how you think about money, take a moment to reflect on what you were never taught about taxes and why. Leave a comment and share the insight that surprised you most. And if you want to keep exploring ideas that uncover the hidden mechanics behind wealth decision-making and financial freedom, consider subscribing and continuing the journey. These conversations are about seeing clearly so that money becomes a tool you direct, not a force that quietly directs you.